Warren Buffett has produced an annual average return of 20.9% compared to the market's return of 9.9% during his investment career. This may not seem like much at this point. Compound interest, on the other hand, explains all of Buffett's $2.47 million and 48% return over the market's $15,500 and 8% return. Today, in this video, we will be talking about Warren Buffett's current portfolio. We look at some of the stocks that made him rich and the stocks that he has picked to make him rich in the future. If you're new to our channel, please subscribe to see more videos like this. Let's get started. Stock 1. Apple, 23.77%. Warren Buffett has the greatest stake in Apple of any publicly traded company. Keep in mind that this is Warren Buffett's Berkshire Hathaway Investment Company's portfolio. With a 23.77% stake in Apple, Berkshire Hathaway owns $47 billion worth of the company. Now, I'm sure you've heard of Apple before. The things you're familiar with may be found all over the world, making this the most well-known brand in the world. They make phones, yes, but they're more than just a phone manufacturer. There's an iTunes service, as well as a laptop, watch, and iPad line of products. They generate revenue in a number of different ways. However, sales of the iPhone are the primary source of revenue for Apple. It's now time to ask why Warren Buffett decided to hold Apple as the largest stake in his stock portfolio. In the past, Buffett has explained why you think Apple stock is a great investment. First and foremost, this is due to Apple's incredible product and the devoted fan base they've built. Consumers are addicted to Apple products and are willing to pay significantly more for an Apple product than they would for a gadget from another manufacturer. Is the product good enough? Is it a well-known name? Apple, according to Buffett, has a moat or competitive edge because of this. The cost comes in second. When Warren Buffett purchased Apple, the company was being sold at a discount for its actual value. There is still a reasonable amount of demand for them. In terms of PE ratio, it's only 17. When Buffett bought it, it was in better shape, but the price is still reasonable. Stock 2. Bank of America, 12.39%. A close second is Bank of America, the largest bank in the United States. The total value of Buffett's holdings in Bank of America is $24.7 billion, or 12.39% of his whole portfolio. Most banks perform the same things that Bank of America does. The following are examples of financial services provided by commercial banks: wealth management, investment banking, risk management, and so on. For some years now, Warren Buffett has been amassing shares of Bank of America. In 2011, when the bank was still reeling from the effects of the financial crisis, he bought shares of Bank of America. Despite this, Warren Buffett continues to add to his holdings in the Bank of America, mostly due to the current low share price. Bank of America, or BAC, is currently trading at a price of just under $30 per share and is generating $2.80 in earnings per share over the past few years, making it a bargain at this time. In comparison to most companies, this translates to a PE ratio of just 10.5 cents. Another reason why Buffett bought Bank of America was because of its incredibly low price tag. It pays a dividend of 72 cents per share for a yield of 2.44%. Stock 3. Wells Fargo, 9.93%. Wells Fargo is a bank based in the United States. Buffett's third largest stock, at 9.93% of his overall portfolio, is in a similar position as Bank of America. Wells Fargo is a financial services and banking corporation that specializes in mortgages and credit cards. We won't go into too much detail regarding the stock because the reason Warren bought it is very similar to the reason he owns Bank of America. He simply purchased it for a low price. On a pure earnings to price ratio, Wells Fargo is actually less expensive than Bank of America. When you look at its PE ratio, you'll notice that it's under 10, which is quite low. Buffett owns a few additional bank equities in his portfolio, primarily due to a low price relative to the company's value. Stock 4. Coca-cola, 9.4%. Coca-Cola is one of Warren's most successful stock purchases to this day. That's what Warren Buffett has stated about Coca-Cola. In 1989, Warren Buffett bought Coca-Cola, and to be honest, I have no idea how he was able to time this transaction so successfully. However, the stock price of Coca-Cola has risen precipitously since he purchased it. One of the reasons Warren Buffett invested in Coca-Cola shares was mentioned in a book I read years ago. One of the things he noticed about his soda lid collection as a kid was that he had a lot more Coke lids than any other soft drink. This is purely due to the fact that Coca-flavored colas was so beloved by its customers. Because of its unique flavor, they have become the world's most popular beverage. This is one of the main reasons Warren Buffett owns so many Coca-Cola shares, as he was well aware of this as a competitive advantage. It's Berkshire Hathaway's fourth largest holding and accounts for 9.4% of his overall portfolio. The total value of his position is $18.7 billion. Warren Buffett spent $2.50 for a share of Coca-Cola stock when he first bought it. It's now $56 a year in dividends for Coke, which practically covers his whole stock purchase price each year. Stock 5. American Express, 8.31%. As we've mentioned in our last video, you should focus on a particular area of expertise and then master all the stocks in it. The banking and financial services industry is one of Buffett's specialties. American Express is Buffett's fifth largest investment, and I now turn to it. American Express is a firm that provides financial services. These people primarily deal with credit card products and travel-related services all over the world. Buffett's recent purchases of American Express are extremely amusing. Buffett basically becomes the hero anytime American Express is in danger and buys part of their stock. He did it in 1963 when they needed money, and again in 2008 during the financial crisis. Buffett is usually greedy when everyone else is afraid, which is one of the reasons he gets large discounts on equities. Stock 6. Kraft Heinz, 5.33%. Kraft Heinz, a company Buffett owns, has been a bad investment recently. With a stake in Kraft of $10.6 billion, Buffett holds 5.33% of his portfolio. There is no doubt in anyone's mind that Kraft Heinz stock has underperformed over the previous few years. After announcing a deficit in one of their quarters, the company's stock has fallen by around 30%. The wonderful thing about Kraft Heinz recently is that it has a pie-saw dividend yield, which Buffett still owns. Because of its low price of roughly 5%, it is one of the highest dividend-paying companies on the American market. Stock 7, 8, 9, and 10. U.S. Bancorp, J.P. Morgan Chase, Moody's, and Bank of New York Mellon. Sector equals banking and financial services. 4 more banking and financial services companies round out this list. Buffett's decision to invest extensively in bank equities has already been discussed in detail. One explanation is because he has a deep understanding of them. One of his benefits as an investor is that he has a deep expertise of this particular industry. A lot of these equities in the sector are also being sold at extremely reasonable prices. In the last year or two, Buffett has bought a lot of bank stocks. U.S. Bancorp, J.P. Morgan, Moody's, and the Bank of New York Mellon make up the rest of the portfolio, with Berkshire Hathaway accounting for 3.1% of the total. Now, let's go over quickly at the next 4 largest positions in Buffett's portfolio. At 1.8% of his Berkshire Hathaway holdings, Delta Airlines ranks as the 11th largest stock holding of Warren Buffett. Buffett had declared that he would never make an investment in the airline sector. Having recently changed his mind, Buffett now holds a few airline equities. Because there aren't many airlines out there, he owns them today. An oligopoly exists in the airline market in the United States because there are only a few major carriers. Also, airline stocks have been recently available at reasonable prices. Delta, for example, has a PE ratio of just 8.9. 1.8% of Berkshire's portfolio is Goldman Sachs. Southwest Airlines is the firm that holds the 13th largest share of the company's shares. The reason why Buffett owns airlines was also explained earlier. In Buffett's investment portfolio, Southwest accounts for 1.4% of the whole. Buffett is utilizing his 14th largest holding to get a taste of the automobile manufacturing business. He's using the General Motors stock he bought in early 2012 to accomplish this. However, he has recently increased his stock purchases. Buffett upped his stake in General Motors by 37% in the final quarter of 2018. As of the moment, Buffett owns a total of $14.4 billion in stocks. The other securities that make up Warren Buffett's holdings are all very tiny stakes in relatively new companies. They are, however, a few notable mentions. Berkshire just purchased a stake in Amazon. They own Visa, MasterCard, Costco, and Johnson & Johnson's Surrey Exam, which made Charlie Munger wealthy. Buffett's holdings in these companies are, nevertheless, extremely modest. All of them are less than 1%. I should also mention that Buffett has purchased all of these equities through a very unique method. He examines the student-to-employer ratio in a company's equity. A low price-to-earnings ratio, for instance. He examines the motives of the company, the value of the company, and a slew of all other things before making a decision. That's all for today. What are your thoughts on Warren Buffett's investment portfolio? Join the conversation in the comment section below. Please click the like and subscribe buttons if you enjoy the video. We'll see you in the next video.